Hey there, folks. Welcome back to our channel, LessThan5. Today, we're diving into the financial world to take a closer look at Intel Corporation, symbol INTC. Did you know that Intel is one of the giants in the semiconductor industry and one of the hottest tickets on the market? Intel has been a cornerstone in the global technology sector, renowned for its microprocessors that power countless devices. But as the landscape evolves, Intel faces growing competition and significant market challenges. So, how is Intel positioned financially? And what does the future hold for potential investors? Let's break it down. Intel's recent financial performance has been somewhat mixed. Over the last 12 months, the company reported revenues of around $52.8 billion, which marks a decline. This drop is largely attributed to the global semiconductor shortage and rising competition. In terms of profitability, Intel's net income was approximately $8 billion, translating to an earnings per share, or EPS, of $1.94. However, the company's gross margin has taken a hit, standing at 44.8%, lower than its historical averages, raising some concerns among investors. On a positive note, Intel maintains a strong balance sheet. It has about $28 billion in cash and cash equivalents and manageable long-term debt of around $38 billion. The company's price-to-earnings ratio, or P/E, is currently about 15.2, which is below the industry average. This could suggest that Intel's stock might be undervalued, particularly if the company can successfully navigate its turnaround strategy. So, what's the verdict? Intel faces formidable rivals, including Advanced Micro Devices, or AMD, and NVIDIA, which continues to dominate the GPU space. While Intel has made strides with its Alder Lake CPS and ventured into the GPU market with its Arc series, it still lags behind in both performance and innovation speed compared to AMD and NVIDIA. Analysts' views on Intel are cautiously optimistic. The stock is generally rated as a hold or moderate buy, in contrast to the stronger buy ratings for AMD and NVIDIA. This sentiment reflects a market perspective that, while Intel has potential, it faces significant hurdles that could slow down its recovery. For income-focused investors, Intel remains a reliable dividend payer, with a current yield of around 4.5%. The company has a solid track record of paying dividends and has consistently increased them over the years. However, Intel's current challenges and its plans for substantial capital expenditures raise questions about whether it can sustain this level of dividend growth without compromising its ability to invest in future innovations. On the sustainability front, Intel is making notable progress. The company has committed to reducing its carbon footprint and aims to achieve net zero greenhouse gas emissions by 2040. Intel's focus on sustainability aligns with broader industry trends, which could make the stock more appealing to socially responsible investors. Market sentiment around Intel is cautious, but not entirely negative. The stock has seen some volatility, reflecting investor concerns about Intel's ability to compete effectively against its more agile competitors. Media coverage has been mixed, often highlighting Intel's struggles to keep pace with rapid advancements in semiconductor technology. However, recent announcements of new product launches and strategic investments in manufacturing have provided a boost to the company's outlook. In summary, Intel Corporation remains a key player in the semiconductor industry, but faces significant challenges that have affected its financial performance and market position. While Intel boasts strong fundamentals, including a solid balance sheet and consistent dividends, its ability to compete with rivals like AMD and NVIDIA will be critical to its future success. Investors should carefully weigh the potential risks against Intel's ongoing efforts to innovate and regain its competitive edge, all while considering the company's commitment to sustainability and long-term growth. Thanks for tuning in, folks. If you enjoyed this video and found it informative, please don't forget to hit that like button and subscribe to our channel for more financial insights and updates. Until next time, stay smart and keep investing wisely.